Courtney, I assume you just listened to Bob, who has a positive view that is really diametrically opposed to yours. He was using the phrase bull trap for today. He was talking about the idea that we may be on the cusp of a bear market. You don't see it that way at all. I don't know whether you're in the minority or the majority here. Explain your position.
Yeah, and I think that's what you really have to take a look at right now is we're seeing some extreme selling pressure. We've had many days here where we have 80 to 90% downside days. So everything is selling off. I think what you want to look at right now is why are the markets selling off, and are some of these companies going to weather through this, or a majority going to weather through this? And if so, you just need to look at this as scooping up some more shares here while they're cheap. And I'm not going to call this a bottom. I don't think anybody who comes on here is smart enough to say, oh, this is the bottom of the markets. But I think you want to make sure that as you have cash on the sidelines, starting to buy in here. And if there's further downside, just make sure you have that positioning to keep buying in. It's a wonderful opportunity that you only get these every 1 to 2 years, or you see large pullbacks like this. And so it's just a great time to start to get into the markets here.
So really what you're saying is execute on a dollar cost averaging strategy at this point, because if the market goes up, you're still going to lower your average cost per share. If the market goes down, you're going to lower your average cost per share.
Yeah, you want to kind of hedge your bets that way. But I do think you just want to be strategic about where you're adding your investments right now, right? Because what you're seeing right now is tech has easily been the thing that's selling off the most this year as interest rates are rising. And I wouldn't be surprised here if you do see some sort of bounce in that just after the extreme selling pressure we've seen. But I think you do want to look longer term here. And as we're in this cycle of the market, you do want to focus on some of those cyclicals, those things that are going to do well in a rising interest rate environment.
Before we get to a couple of your picks, which are a little out of the mainstream for these times, I want to go to your forecast for the economy in this quarter. You think it could bounce back to a 3 to 4% rate. I think that's a little higher than most of your peers would say right now. What gives you that kind of confidence?
I think what you want to take into account here is the fact that markets are pricing in all the extreme negative news right now, and there could be a lot of positive upsides here. There is a lot of thought that we can see inflation starting to peak. It could start to come down here later this year. We could see maybe the Fed is a little less or more dovish than people are expecting. None of those positive surprises are in the markets right now. And I think what you want to take into account is that can actually surprise the markets a lot more than some of the negative news. Getting more of the negative is already priced in, but anything positive, I think we can start to see.
But I'm asking about the economy. I'm not asking about the markets here. What tells you that the economy may be ready to? I mean, are you in the camp that first quarter print was an anomalous one because it was mixed up with export-import numbers and so forth, and that our basic trend right now is back to 3 to 4%?
Yeah, and I think a lot of that has to do with having a really strong consumer right now. And that has been a big argument, too, of is the strong consumer just in the past, or are they going to continue to be strong in the future? And I am of that camp here where we are still seeing people are sitting on a lot of cash. They are actually not spending that down as fast as people would expect. Yeah. And there is still a lot of demand going forward. I don't know about you, but I have been traveling a lot recently. All of those planes are packed. The airports are packed. That's not people just having to spend. People are wanting to get out and travel. They're wanting to get out and do things. That's going to drive the economy.
I'm going to turn to the other Courtney here today and ask her to pose a question about Nordstrom, which is one of your picks.
Yeah, I find it very interesting that you have Nordstrom as one of your picks, and you note the dividend yield, which certainly it does have. It's not usually a reason that I see people pointing to Nordstrom, but why do you think that this is particularly a name that could see a recovery if the consumer remains as strong as it sounds like you believe the consumer is and will continue to be?
Yeah, and of your retailers, I do really like Nordstrom. They've been really strong. They have a very loyal customer base. They were one of the first to get an online sales, but they also have a lot of your flagships in some of your major cities like New York City or San Francisco, which have not had the same kind of foot traffic that they have pre-pandemic. And that is starting to come back as people are starting to go back into the office. You're starting to get that tourism back in, and that can really add to a whole segment of their business that has not recovered yet. I think they have a lot of room still in their earnings and in their sales to grow. And they're still trading at relatively cheap. They still have a lot of room to run here pre-pandemic levels.